Every single week, I get messages from American friends and clients living abroad, and they generally ask me the same question. Joseph, should I renounce my US citizenship? I am sick of the IRS following me everywhere I go. I'm sick of FATCA. I'm sick of filing tax returns in a country I don't even live. Should I just give it all up? And every single time my answer is the same. No, I don't think you should. And today I'm going to tell you exactly why. And more importantly, what you should do instead. Because here's the thing. The people asking me the question are not wrong to be frustrated. The US tax system is genuinely one of the most aggressive in the world when it comes to citizens living abroad. And America is only one of two countries on the planet that taxes their citizens based on nationality rather than residency. That tells you everything you need to know. So the frustration is completely valid, but the solution is in most cases not to renounce your US passport. That's the wrong answer. I'm going to tell you why. So let me start with the basics, because I think a lot of people don't fully understand what renouncing US citizenship actually means in practice. Because once you renounce, you are permanently giving up your US citizenship. This is not a pause, not a sabbatical. This is not something you can undo if you change your mind in a few years' time. Once it's done, it's done. So, you will no longer have the right to live and work in the United States without a visa. You will no longer have the right to vote in US elections. You will no longer be able to hold a US passport. And if you want to visit to see your family or your business or anything, you'll need to apply for a visa, just like any other foreign national. And this is where it gets complicated, because the US government has a legal right to deny that visa. There's no guarantee you'll be allowed back in America. And under a law called the Reed Amendment, the US government can permanently bar former citizens from re-entering. And believe me, it does happen, especially if it's motivated by tax avoidance. Now, in practice, the amendment has rarely been enforced, but it exists and has been used. And in the current political climate, with increased scrutiny on high net wealth individuals and tax compliance, it is not something you should take lightly. So before you can get to the tax question, you need to ask yourself, am I genuinely comfortable with the possibility that I might never be able to return to America, that I might not be able to attend a family funeral, visit my children, close business deals in NI without the permission of a US visa officer? Now, for most people I speak to, the honest answer is no. They're not comfortable with that. They're frustrated with the tax system, sure, but they're not ready to permanently sever their connection with the United States. So let's now talk about the exit tax, because this is the part that most people don't fully understand until it's too late. When you renounce your US citizenship, the IRS treats it as if you have sold every single asset you own the day before your renunciation. Every share, every property, every business interest, every pension, everything, the lot. This is called mark-to-market exit tax, and it applies to what the IRS calls covered expatriates. You are a covered expatriate if your average net income, over the past 5 years, exceeds a certain threshold. So I'm being distracted because a bird has just landed right on top of the camera. But let me continue. Hi, bird. Or if your net worth, exceeds $2 million. So if you meet either of those thresholds, the IRS will calculate the gain on every asset you own. If you sold it all on the day you announced, you will owe capital gains on that deemed gain. So let me give you real-world examples. Let's say you have a share portfolio worth $3 million with an original cost base of $500,000. Your unrealized gains is $2.5 million. You would have to pay tax on that. So even though you haven't maybe sold everything, even though you haven't received a single dollar, the tax bill alone could easily be $500,000 or more. And that's before we get to property, business interests, deferred compensation, and pension accounts, which have their own separate and often more punishing tax requirements when you exit. Now, I've spoken to people who went into the process of renouncing their citizenship thinking they were going to save a fortune in ongoing taxes, and came out the other side having paid more in exit tax than they would have paid in US taxes over the next 20 years. This is not hypothetical. This happens. And because other people make the decision based on emotion, the frustration of dealing with the IRS after years rather than sitting down and doing the actual math. So, if renouncing your citizenship is usually the wrong answer, what is the right answer? Well, this is where it gets interesting. Because the solution that most people don't know about is actually far more powerful than renouncing your passport, and it doesn't require you to give up anything. The answer is a second citizenship, combined with a proper structure and international arrangement. And this is how it works. You acquire a second citizenship through one of the Caribbean or one of the other jurisdictions, and you invest in a program to get yourself a citizenship and passport. St. Kitts and Nevis, Dominica, Grenada, Antigua, St. Lucia, these are all legitimate legal programs that have been used for years and years and years. Talking about tax evasion. I'm not talking about hiding money in offshore accounts. I'm not talking about anything that is illegal or puts you at risk with the IRS, because of course you want to sleep at night. You want to know your affairs are in order. So everything I'm describing is legal. It is done with proper professional advice, and if it is disclosed correctly to the relevant authorities and is used by thousands of successful people around the world, not just the ultra wealthy, but entrepreneurs, professionals, and families like yourselves, who have simply taken the time to understand how the international tax system actually works. The difference between tax evasion and tax planning is transparency. Tax evasion is hiding income. Tax planning is structuring your affairs within the law to minimize what you owe. And every major corporation in the world does this. There's no reason why an individual can't do the same. So let me also address something that comes up a lot in the comments when I talk about the subject. People say, this is all very well, but I'm not a millionaire. I don't have $3 million. I don't have a huge share portfolio. Does this apply to me? And the answer is yes, more than you think. So even if you're not subject to exit tax because your net worth is below the threshold, the question of whether you'll renounce your citizenship is still one that deserves very careful thought, because the access that a US passport gives you is genuinely valuable. The US passport currently provides visa-free access on arrival to over 186 countries. It is one of the most powerful travel documents in the world. And beyond travel, it is a statement of belonging to one of the world's largest and most influential economies. The ability to live, work, and do business in the United States of America without restriction, without a visa, without expiry date, it is something it is worth a great deal, and you should not necessarily give that up. So before you give that up, make sure you generally have exhausted every other option. So what should you do if you are an American living abroad and you're frustrated with tax burden? My recommendation is always the same. Start with proper international tax review. Sit down with a qualified advisor, not just a US accountant, but somebody who understands both the US tax law and international structuring. Understand exactly what you owe, why you owe it, and what your legals are for reducing it. In many cases, people discover that their actual tax liability is far lower than they thought, because they were not making use of exclusions and credits that they are entitled to. In other cases, a second citizenship and a change of residency generally does make sense, not as a way to escape the US tax system entirely, but as a way to legally restructure your affairs and reduce your overall burden. And in a small number of cases, usually involves very high net worth individuals with no intention of ever returning to the United States. Many generally want the right answer, but it should only be the last resort, not the first. If you want to understand what the right answer is for your specific situation, I offer private strategy sessions through Frederick Capital. The link is in the bio and the description below, and I can look at your specific circumstances, your income, your assets, your residency, what plans you may have, and I can give you a clear, honest picture of all your options. No sales pitch, no pressure, just a proper conversation about what could actually be possible for you if you are looking at international options. If you found this video useful, please share it with any American colleagues and friends you may have living abroad, because these are really important decisions and often people make the wrong decision. So if you'd like further information, please reach out to me. The link is in the bio or in the description, and I'll happily talk you through your options.